The foundation of trading, especially in financial markets, involves analyzing economic indicators to evaluate an economy's performance. However, successful trading also requires incorporating technical analysis, understanding market sentiment, and employing effective risk management. This comprehensive approach allows traders to navigate the complexities of the market more efficiently. I'm very sure that was very, very technical. Like, in fact, that was a lot of things for you guys to grab. But let me simplify it again by reading it this other way. Trading starts with understanding how the economy is doing. This means looking at key numbers like production levels, job figures, and price changes, but it's not just about the big picture. Successful trading also means watching market trends and how people feel about the market. By combining these insights, traders decide when to buy or sell. So what does this all mean? What does this all mean? Well, it simply means that as traders, the very first thing you need to understand is what is really happening in an economy. For example, let's say you're trading the US dollar. What is really happening in the US economy? That is what you should be focused on first as a trader. That is a trader who trades the US dollar. If you're trading Bitcoin, what is happening in the Bitcoin space? What is happening in the crypto space? What is happening in something related to that? If you're a stock trader, let's say you are buying or selling metal stocks, you should be understanding the entire principle around Facebook, Meta incorporation as a whole. What is the current economy of their situation? Is their figures good? Are their figures bad? Do they have a current case or not? Is the figureheads, the brand ambassadors, are they having challenges that is publicly known that is going to affect that particular thing, that asset you're trading? So that is it. That is basically the very first thing. Now, in this video, you clicked on this video to definitely figure out how you can analyze the market before you even look at the chart. And right inside here, allow me teach you guys using a PDF, or rather a presentation I have prepared. So the first thing you're going to say is, let's see how I analyze the chart. I analyze the market before even looking at the chart. And first thing is this. Well, there are four things to trading, like I had earlier stated. There's the fundamental analysis, there's the technical analysis, the market sentiment, and risk analysis. Now, people all over the world call it fundamental analysis, but it is basically economic insight, understanding the economic information in the market. Let's head straight into that. That is the first pillar. And before we head into that, I would like to tell you guys this. So technical analysis is you being in the chart already, right? So before technical analysis, there is something called fundamental analysis, economic insight basically. And this is what you need to do to understand the markets, to understand the direction of the market, to understand what is going on before you even look at the chart. And a lot of people, they underestimate what this can do. A lot of people underestimate this, and I do not blame them. Most people who do this and get away with it easily are people who are into should I say short-term trading, very short-term trading. People who are into long-term trading, this is like the first thing. This is the key thing that you have to look into. So let's head in further. Basically, fundamental analysis or economic insight is basically economic data. Sorry for the valuation there. Economic data valuation, basically, that's still correct. And what does this entail? It entails economic news and financial news. So for example, what is the state of the crude oil inventories in the US? That's an economic news. It's not a financial news. It's not telling you how much they are selling crude or telling you how much crude is going to be costing in the later future. But if you look at it in depth, the amount of crude oil available from the crude inventory report tells you whether crude is likely going to become more expensive, meaning things made from crude will become more expensive or will become cheaper over time. And you would always notice this whenever the crude oil inventory report is released. So let's head into it. Now, you can get all this information on one big known simple. Funny enough, this website is one of the simplest websites I have seen, but it is one of the biggest of them all. This is called Forex Factory. Now, in Forex Factory, you can see right here you have trades, news, calendar, and markets. So this is how it goes. You get to see the news, what is happening at the moment. You also get to see the calendar. Now, the calendar is just the news in a number format. So using numbers to present the news to you, basically. What was the figures before, what is the figure expecting, and what is the figure now. Like, that's what you see here: actual, forecast, and previous. So actual is what is the figure as of now, which is when they release the information. For example, let's say BOJ core CPI year over year, right? So the previous value, meaning the last released value year over year, was 2.2. The forecast value is at 2.4. That means economic analysts come together and decided, okay, looking at the trend, looking at the way it has been coming for this particular information, we are expecting 2.4%. And then when the figure gets released after carrying out the proper calculations of like the actual situation, you then get an actual figure written here. And then after that, that is all about the economic calendar. And then the news now gives you insights, what's happening and how it might likely affect the figures we end up seeing later in time on the actual when it's produced. Now, my personal processes. My personal process is first and foremost, I love to go through economic data valuation, right? Then I like to see market strengths, meter now, and then market strength chart. Now, these two things are very, very similar. The last two things I mentioned, the strength meter and strength chart. But as we go on, you notice the small differences, the nuance, the small change that makes me put two of them as two separate things. So right off the bat, the economic valuation, in my opinion, let me explain this, why I call it economic data valuation. Now, it's you taking that information. You can see the economy, the news, right? The news, the calendar, economic calendar takes account of the figures released and puts it into a line for you. Now, if you say you should go into Forex Factory and you should be looking at every news one after the other every day, you have so much news and you get lost in the should I call it, in the haystack, basically. But it's converting economic information into weighted values for easy comparison. Now, what does it mean? So there are some news that have like very strong impact. You could give it a high value. There are some news that have like medium impact. They are not so intense in the forex market or trading market, basically. So you could give it a medium weight. And then there are some that are just mild. They do have effect, but they are very, very mild, like very, very small. So things like that, you could give it a low valuation. Now, one of the two that does this very well is the Edge Finder 2 by Trader Nick, owned by the A1 Trading Company. You've heard me promote this thing over and over again on this channel. Now, I want to clarify, I do not have a sponsorship from them. This is not a sponsored video. This is me talking from my own personal experience. I have used this tool for a week. I didn't use it up to a week though. I was busy during that week. But they had a free week where you had access to everything on the tool, right? And I was able to see everything they had on the tool. Not really everything all the way to the back end, but everything to a good extent, right? To the extent that you just need to see. And I realized something. They were able to take fundamental analysis into a simpler format by simply converting things into weights and then using that weight to determine if it's good or bad. And you can see it right here. Like, this is just an example of it. You can see how it weighs the different results gotten after the actuals have arrived and the date it's last arrived, right? And then telling you the impact on the dollar and then the stock market in general. You can see as at the time when this particular screenshot was taken, this is not taken by me, this is like a screenshot on their website. As at the time when this screenshot was taken, this was February 27th 2025. GDP growth was at 0%. Like if you compare the actual against the expected, what market analysts and deep analysts expected, it was literally zero. There was no deviation from what they expected, and that made it neutral, meaning we expected the news, so we're not impact. There's no impact. Basically, we don't feel scared or we don't see the need to rush to go get more dollars in our pockets, right? Same thing with the PCE year over year, right? Now on the service PMI right here on 1st of February 2025, you see the surprise was 1 and it's painted in blue. Well, it means that it was the figures released was one figure away in the positive from what the analysts expected. They expected a 52.5 and then the actual came out at 53.5, which is one away, meaning okay, the US economy in terms of services is doing better than expected. And then for manufacturing PMI, you can see the number was negative 0.3. So similar situation, but this time on the negative side. It was less than expected. So people are like, not so strong in terms of manufacturing. We're not so sure of the economy at that point in time. But then again, they now put all of this, right? All of this, and then they give you a calculated weight and then tell you, oh, okay, this whole thing is 30.7% bearish on the US dollar. And looking at what I'm seeing here, it seems like this was taken in March 2025, which was last month, possibly somewhere after March 12 or on March, somewhere after March 13th, because this is the latest date, or later than that, right? So all of this, as at the time when this news was taken, this picture was taken, it means with all this information on the US dollar, the impact of the news is saying that the US dollar is quite bearish. Not so bearish, but quite bearish, 30% bearish, which is very above 25%, so it is quite bearish. So I personally, I looked at that whole thing and I, thought of a way to incorporate it for myself, because I do not have the money to afford that tool yet. So I decided to create something mediocre, something close. And as of yesterday, as of the time recording this video, this is my own analysis on every forex market. Now, I only trade forex market for now, so I'm only looking at the forex market and its impact. And this is my own results as of now. So I'm saying that the US dollar is quite neutral overall. In terms of the high impact situations, it is neutral. Medium impact situations, that's the information data, the economic data, the news, it is also neutral. And then on the low impact, it is also neutral. Unlike the Australian dollar, where it is in the negative of the neutral end on the overall, the high impact is quite neutral. The medium impact is actually bearish, like clearly bearish. And then the low impact, it is absolutely neutral, like totally point neutral, zero. So this is my own personal tool, right? Now, apart from that, I had something else I showed you guys called currency strength meter, right? The currency strength meter is built not by me. Now, this is a tool you find on the internet. Now, I like to go to marketnukes.babypips.com and FX Blue to see this particular information. Now, what this does is it is a meter that measures the overall movement of an asset or market over a period of time. Now, you get to select the period of time you want. So for this particular one, you can see this is a daily meter. So it's telling me on the daily time frame, right? On the daily time frame, it seems like in the past 1 day, the Swiss franc has been the strongest currency compared to the New Zealand, which has been the weakest currency. And similar thing is seen here on the relative currency strength meter. This is from FS Blue. Now this one is quite different from this. This is only looking at daily. While this, you can see there's something called short term, medium term, long term, and I'm selected on long term. So what it's doing is on the average, on the long term, this has been the best performing things, the gold and the the Swiss franc. Now, I cannot edit the currencies shown here. That's why I'm seeing gold and Bitcoin, but I don't actually care about those two. I only look at the currencies here, not the metals. Last but not least is the market strength chart. Now, the difference between the chart and the meter is that the chart is the meter but over time, right? And this is only seen on marketmaker.babypips.com for now. So it's telling me the strength over time, meaning as of April 15th, this was the strength all over. And this is a daily, right? You can see it's last 30 days. And as of yesterday, being the close of market Friday, this was the last strength on the daily. Now, you can also switch time frames when you get to marketmaker.babypips.com. Now, with all of this, I want to show you guys a very short practical on how I utilize this information. So I'm going to hop straight into my browser. Right, I'm going to hop straight into my browser. You can see over here I have my own fundamental overview showing up. What I do is I take the economic calendar information and I put it into this place. It generates me an impact calculator based on the news. So I have an impact calculator if it's a high, low, or medium, and whether it's going to be bearish or bullish. If it's greater than actual or less than actual, then it tells me, oh, bullish, neutral, bearish on that particular news, right? Now I translate this whole information per currency. So I filter it here for each currency. So this currency is Australian dollar, this is Canadian dollar, this is Swiss franc, sorry, Canadian dollar. You can see everything here has to do with the Canadian dollar news. This is the Swiss franc, this is the euro, and this British pound. So some of them have way more information available because I started this thing about a month ago. So you won't see like so much information yet, but over time I expect it to become way more loaded with so many news, though it's already very heavy on the Excel. Now mind you, I'm not saying that this is like absolutely accurate, right? This is not absolutely accurate because some things are not properly weighted yet, so I'm still trying to gauge a proper weight for each and everything I have on this place. Now, this is for my fundamental analysis. What I do is I like to first and foremost go to the calendar and look up what is happening, right? What is happening on the calendar. I like to filter for a currency in particular and look at it. But in order to get like a better view, I put it in my calculator, my algorithm, and then I get a better view of each currency from here. Overview, right? The dashboard overview. So if I want to trade, for example, I want to trade the dollar against the pounds, right? I would be focused on these two information right here. So from this information, I can say it's better I buy the pounds than the dollar in terms of my current weight for fundamental analysis. And if I come in here, I can see even deeper each and every information related to only the pounds. And what I usually do personally is I like to filter first and foremost for the most recent weeks. So I created a check, right? The latest week is always bright and deep green, and the older news are white. So by the time new news comes, this will automatically update with the latest news. And just to track which one is the latest, I did this coloring. So I usually like to look at the latest news first. So I'll filter the latest news, and then I'll look at it by my impact weight. So I have some things here, which is like impact. So I can now say the last set of news that came out for the British pound, right? The last set of news is slightly bullish. Like, in fact, it is so slight bullish. It's not so bullish enough. It's not bullish enough to be called a bullish move, right? That's for the high impact, which is by far the most important. The medium impact it's completely neutral in my opinion. The latest set of news, right? And then the low impact is highly bullish, very very bullish. So it means overall and underlying, right, the underlying tones of the British pound is quite good. I then move forward to say, okay, add up the older week, like the last sets of news alongside with it, and I just do that overview. I know this is taking quite long, and you can see now I'm seeing, okay, high impact is now more bullish. right? And then medium impact. Okay, recently the medium impact has become more stable, becoming more and more less and less bullish, but it's still slightly bullish. And then the lowest impact news is still very bullish in this looks here. You can see more greens than red. You see 3 red, 4 blues, 5 blues, 5 greens basically. Meaning overall recently the pound is still gaining strength. Now against the US dollar, I do the same thing here. You can see the recent news. These are the recent news that came out. These ones. This is week 16, the most recent. So by next week when new ones come out, you see I will start seeing 17, week 17. So we're currently on week 16, right? So this is how I analyze my fundamental, right? This is the fundamental. And then I move into strength. Now, the reason why I like to look at charts. Now this is why I have meters and charts. Meters is to see a specific time frame. This does a good job of giving me 3 time frames in one, but chart is for me to see a historical move, meaning I'm seeing that this thing has been up and it's pushing downwards. Not just that it is weak, but is it weak because it is currently weak, or is it weak because it has been moving towards the weak side? This is why I like to use the meter alongside with the chart. I like to use both meters. So what I do is I like to have both of them showing like this. I like to have both of them showing like this. I can put this one like so and this one like this. So what I do is this one is long term all the time, right? The relative strength, currency strength, right? It's long term, so it's just there for me. I'm a swing trader, and I come in here to look. I start with the highest time frame. So on the monthly, you can see this is way more better to invest in as compared to the most dying thing here, which is this. And then the US dollar sinking hard. Now these 4 currencies are going to be focused for this particular situation. And then I head into the weekly, where I can analyze, okay, so on the weekly what's happening. Is anyone becoming weak? Is anyone starting to gain? And you can see the Australian dollar is starting to gain on the weekly, since the US is still tunneling down. And you can see just from here, you can just see what's happening. And then you go down to the daily and you now have yourself, okay, a very good perspective of what you should be buying and what you should be selling in the market. So my dear friends and viewers, this is exactly how I personally view the market. This is exactly how I view the market. This is exactly how I see it every single time I look at the chart. Or rather, before I even look at the chart. This is me looking at the market and saying, this is what I expect, and then I go into the chart and look for situations to really second that motion. I do not trade outside that notion I get, meaning I get my bias outside of the chart. I only come to the chart to look for the chart printing reasons to follow my bias. That's it. So I'd like to tell you thank you for watching this video, and I hope you did learn something new in this video. I would like to ask you guys to hit the like button, hit the subscribe, and share this video. But also I know this is coming in really late at the end. I would like to hear your comments. How do you read the charts? How do you read the market before you even open the chart? If you even do you even look at fundamental information at all, or you just dive heading straight to the charts and it's business as usual? But then again, whichever your answer is, it's all fine, it's all cool. I'd like to say thank you for watching again. Once more, do well to hit the subscribe button and join me as we move on this Forex journey. Peace.